Good morning, or well, no, good afternoon, everybody. Welcome, welcome, welcome. Hopefully everyone stayed awake today. I know the markets were a little bit slow, a little brutal today in terms of the price action, but as long as you stuck to the plan and, you know, stayed patient, today would be a big day for staying patient, should have done just all right. So, before we jump on in, as always, make sure to swing on over to slingshotfutures.com, scroll down, and click on the newsletter registration link right here. That's where you're going to be able to sign up for our email newsletter list. You'll be notified every time one of these videos comes out. And along with that, in the email newsletter, we talk about a bunch of stuff that we don't have time to talk about in the live stream. And that's going to be everything from stocks, options, crypto, futures, you name it. If it's moving, it's going to be in that newsletter. So make sure to sign up for that so you don't miss anything important. Of course, along with that, if you haven't done it already, click on the 3-day trial. That's where you can sign up for a free 3-day trial with us in the room. You can hang out with us for a couple days, get your feet a little bit wet, and just generally have some fun with us. See how we approach the markets, ask some questions, and just have a good time overall. So make sure to sign up for that if you haven't done so already. Now, taking a look at the news for tomorrow. The news for tomorrow, relatively packed. I mean, we have a good amount of stuff going on, but the problem is a lot of that stuff really isn't, it's spaced out all over the place. So tomorrow might be a little bit of a difficult one, just because by the time one news thing finishes and everything kind of gets back to normal, now it's starting to get ready for the next news announcement. And those kinds of days can be somewhat frustrating every once in a while. Now, the nice thing here is that it's a nice split between different countries, so it's not a huge deal. But tomorrow morning at 3 o'clock out of the Eurozone, we have ECB President Draghi speaking. At 8:30 tomorrow out of the US, we have the PPI for June forecasted at 0.2%. Out of Canada, at 10 o'clock, we have two things: the Bank of Canada Monetary Policy Report and the interest rate decision. Interest rate decision forecasted at a lift to 1.5%. At 10:30, we have crude oil inventories, and that's forecasted at a negative 4.2 million. So with a negative 4.2 million, make sure to keep an eye out for the API a little bit later today. The API report comes out and gives you a generally better idea of in terms of what the inventories are going to come out as. API reports come out at 16:30 to 16:35, depending on when that API report actually launches. It's a subscriber thing, but it will launch publicly. It usually takes 5-10 minutes before it shows up, but that will come out later today in the afternoon session. At 11:15 out of Canada, we have a Bank of Canada press conference, and then at 11:35 we have the Bank of England Governor Carney speaking. So a lot of speakers tomorrow, a lot of news announcements tomorrow, and a lot of different countries having an impact on these different news announcements. So it should be an interesting one for tomorrow. Something to definitely keep our eyes on as we move into tomorrow's trading, and tonight for that matter, to kind of see what happens. Starting off on the euro. Now the euro, back in the corner, there we go. The euro, for the most part, had a little bit of a sell-off today, but then it bounced back up. It mostly didn't do a whole lot. It did have a slight bear trend, but then towards the lunchtime to afternoon session, it started picking back up again, and now we are basically right where we started at 17,930. Not a whole lot has happened on the euro. We're just kind of chopping around back and forth. We do have a new level of resistance at 18,095, and we're trying to get that pushed down. I still really want to see that test at 17,425 for the bounce, but we just haven't gotten it yet. So the big thing that we're waiting for here on the euro is just to get out of this middle, right? We're in the middle of everything, and there's not really much we can do here until we get away from this. So for me personally, I'm not really looking to do anything on the euro. I think the anticipation, like we were talking about yesterday, by the way, worked out perfectly. We were looking at the bear side on the euro going into the overnight session. Didn't go all the way down. We were looking for that 17,425, but either way, the bear move did definitely spark some great trade opportunities last night and this morning. Now, past that, again, we're just stuck in the middle of the range. We're not really seeing that follow through. I have to assume with that amount of bearishness to the downside that sellers are going to give it a shot to try to push lower. But if they can close this bull bar that it's on right now with some relative strength, a really strong bull bar might just scare away some of the sellers, and that could lead to another attempted lift up. The one thing we do have going for us on the sell side for the euro is we are back below the top of the channel, and a retest of that area will be seen as resistance for the market participants to try to sell into and shove the market down. So that is the next area of interest that I'm looking at. But it would be nice to see it kind of break through just a little bit to test that level of resistance above at 18,095. We'll have to wait and see. Where it stands now, though, on the euro, I'm not really looking to do anything. I'd rather sit on hands and wait for it to come to me at this point in time. Over on gold, gold did end up cycling all the way back down, and as expected, a huge amount of support came in around 46.9. Now again, it's another one of those that just missed that level of support, physically testing it. But one way or another, I mean, that was just a beautiful bounce. That's exactly what we were talking about yesterday. It didn't actually test it, you know, like an actual, it didn't poke it, if you will, but it did come very, very close. The low on that candle was down at 47.7. That was 46.9. So it only missed it by about 8 ticks, or 80 cents for gold. Not too bad. So beautiful bounce off of that area all the way back up to retest the inside swing high at 57.1. And now we're in a similar situation to the euro. The euro had a beautiful bear trend working lower. It was looking for a level of support. It just missed that level of support. Bounced back up again. Now we're on gold looking at the exact same thing, and the problem is here, same thing with gold, it's smack in the middle. So I don't really necessarily want to do a whole lot on gold, but the one thing that does stand out, just a shallow level of support, is the fact that they couldn't close below that swing low. That's a big deal. That's going to be where a lot of traders will have their stops, so this is probably where some of the stop run came on gold. But to be fair, a lot of traders will wait for the market to actually close beyond that level, so that they can say, okay, yep, I was wrong, it's time to get out. If it closes beyond it and goes beyond that candle, cut the trade, it's done and over with. In this case, all it is just one giant wick down here, so it probably trapped out a lot of traders before they realize, oh crap, wait a minute, that didn't actually break. Well, I mean, it did break, but it didn't close underneath it. It's not broke in, if you will. So a lot of traders might end up jumping in and chasing the market back up, thinking that the buyers have defended these lows. So I think the big thing here that we're dealing with on gold is that we're going to have a lot of buyers that the traders, or not the traders, the sellers are going to have to work through to get out of the way. Now, again, in the bigger picture, I still like the idea of gold going up towards the highs of the channel, but that's a month-long type play, right? That's a long ways out. And really what I'm looking for right now on gold is to see whether or not this level does end up being the support. So what we can do is we can look at that previous swing. I'm not going to put a thick orange line on there because it's not that strong, but we'll go to 3 on the thickness and just look at this area as the market pulls back to it. 1252.2 is that line in the sand, and that's really what I want to see. Going into tonight, going into tomorrow's trading, etc., does the market break down below 52.2? If it does, then we can utilize it as resistance, and we can try to push the market back down to 46.9, maybe a little bit further. If it holds it as support, we'll see the market kind of bounce, come back to it, retest it, hit its head, or I guess hit its feet, and then bounce back up again as support. So we do have a level of interest going into tomorrow at 52.2. We just have to wait for the market to tell us which way it wants to go. I do like, again, the monthly view a little bit more zoomed out. I like the idea of a long. But right now, well, the buyers really aren't showing up yet. They defended the lows, and sure, this might have been a trap, and this thing goes flying higher another $300. But I think in reality right now, we need to wait for a little more confirmation. So gold is kind of on the sidelines, but I am going to be watching 52.2 as a big area of interest going into tonight and tomorrow. Over on crude oil has basically failed the breakout. We have the wedge high. They broke out above the wedge high. Now that we're looking at this candle here, not looking so great. A lot of traders really wanted to see the market stick above those highs. You'll notice, if you do zoom in, you'll notice that it came back and tested it. That was that support bounce we were talking about yesterday. A breakout pullback to the wedge, nice little bounce off of it. That did happen, and it worked out beautifully. But the problem that we're dealing with now is that this candle is not looking so great. A lot of buyers that might be in this long, they're probably going to have stops below this bull bar that kicked the move off. Really wide stops would be below that. Doubtable that there's really going to be that many there. I think more interest is going to be right there. And this is where that line in the sand comes back in. Will the buyers defend here, or will they try to defend and fail, and then it starts breaking down? So that is going to be a big area of interest at the lows of where all of that bull spiking took place, and that's at 73.51. Aside from that, there isn't really much else to work with. There was a new level of support that built in on that rally up at 73.99, hole number 74, but we've already broken through that, so it's not really going to do a whole lot for us. And in the grand scheme of things, crude oil just doesn't look that healthy. We had the pop-up, we had the near test, again, another near test of resistance at 74.78. Now it's having a little bit of a hard time. just doesn't look like the buyers are that committed right now. So I think in the big picture, what we really want to see here is a couple traps to get things going. The traps that we have going on right now just aren't going to do much for us, and I think it's much better to wait for at least 73.51 for support. Better, you know, I think that's going to be the best one, honestly, at 73.51. But if it can push down to 72.99, we have whole number support at 73 and support at 72.99. And just below that at 74, we have another level of support. So it's kind of stacking up around that $73 area if it does let loose. For the most part, though, I am looking for the sellers to continue trying to drive lower, at least down towards those areas of support going into tonight. So I'm going to be leaning on the sell side just a little bit until we see what the buyers want to do, if it can start breaking through those or if they fail. And then finally, we have the S&P. The S&P and the index markets as a whole and the stock market and the futures as a whole were just dead today. Very, very slow, and you can see that reflected in the price action. Nothing really happened. The S&P did test that major level of resistance again at 27.97 with beautiful rejection off of it. It's already back down, you know, 4 points off of that, which today is actually quite a bit. On a normal day, 4 points isn't that big of a deal. But on a day like today where nothing is happening, a 4-point dip off of a level is a pretty nice bounce. You know, overall, the level of support down at 72.25 is about all we have to work with, and there's a boatload of open space down here. You know, if the market does decide that it wants to start turning back lower again, there's a lot of open space for this to fall down to 72.25, and that is the next level of support that we would anticipate seeing. But if it starts breaking through that, it's the same situation. There's a huge amount of open space here with little to support the market again. So it's kind of teeter-tottering on kind of a dangerous area here. Sellers need to really push, and if they are able to, there's a whole playground that's just waiting for them for the downside. But the buyers are going to have to step up and defend against that if they're going to keep it up at these highs. Resistance so far at 97 is holding. 2800, of course, big round number is going to be a pretty big deal too. That's about it. If it can break above 2800, then we have 2806.25. But for the most part, the sell side just has more room, which probably means that we're going to have buyers taking profit, and they're going to be looking for a pullback. And sellers know that a pullback is probably going to happen sooner than later, so they're going to start selling a little bit more aggressively, trying to get that pullback to occur. You'll notice I'm saying pullback because this is still a bullish market, okay? Don't fall in love with the downside right now because the buyers definitely own this still. But I think a lot of buyers are going to let off the gas pedal a little bit and wait for a better entry point, and that's going to come at 72.25, maybe even a little bit higher, but 72.25 is the next area at the moment. So that is all I'm taking a look at here. Now, I did have a comment yesterday on the YouTube video, or the recording of this live session, that wanted me to look at the December corn. So Tom, I got you. Let me load up a December corn here. ZC. Now, it didn't say, I don't know if you're here right now, but it didn't say whether or not it was a daily chart, a weekly chart, a month. It didn't. None of that was in there, so I'm not exactly sure which one that you want to look at. So I'm going to default to my normal 4-hour chart. And if you are here, just let me know, and we'll take a look at that. But we'll look at the 1218 Dees corn. Go on a 240-minute 4-hour anchor chart, and let's load up a good 2 years worth of data. Should be enough. Hello, can I click? There we go. All right, give that a second to load up here, and then we can rock and roll for December corn. There we go. All right. So the way that corn is moving right now, which this bull bar is a little bit extreme, but the overall trend is down. The big thing that's standing out here is the just huge move that happened on June 20th, right over here. This big low that was put in. The market cannot break through that. They're having a heck of a time, and every time it does manage to dip underneath it, just pops right back up again. So I think that's a huge level of support that's coming in and supporting the market at the moment. That's at 348.25. Now, looking at this does appear to have somewhat of a kind of a descending wedge look to it, right? Something like this. But, you know, in the same breath, you could also just kind of draw it like that, and it would be kind of a wedge that way. So there's a lot of different ways to look at corn. Obviously, the trend is bearish. With this big of a bull bar, though, that would make me a little bit nervous. I would not want to be the first one to the party when I see something like that trying to sell into it. unless you're the type of trader that likes selling exhaustion. Now, exhaustion is basically a move that is overdone in one specific direction, where a lot of buyers who are maybe buying the lows will be taking profit or selling the highs, whatever. And you have this huge blow off. It's kind of like Christmas, right? Like, oh, thanks for the present, I'm going to exit, right? And they start taking profit. That could be the case here on the 4-hour chart of corn, where we have such a monster lift to the upside. It's the biggest bull bar. Man, let's see. How big is that bull bar? It's the biggest bull bar since that blow off on June 19. So it's been, you know, a good amount of time since we've had a bull bar that big, and really a candle that big. It dwarfs pretty much everything else except for that one candle. And you'll notice what happened after that candle formed. Same thing, right? A lot of back and forth, a lot of chop, a lot of sloppy movement, where it finally pulls back and then gets a little more continuation and fails. And again, the high of that move ends up being resistance. So, you know, for the time being on corn, I would rather lean on the bear side, but I really don't know that I would want to do it after a candle that looks like this. Now, one caveat to that, if we look at the USDA agricultural news for this week, we do have a big USDA news announcement on Thursday. That's the meat price spreads, the WASDE, and the crop production. Those are huge, huge numbers if you trade in the agricultural industry. Those will move the market so ridiculously far that it's kind of tough to keep up with. So, you know, if this starts going beyond Wednesday and it's not really doing much, Thursday, it's probably going to do something. The big things that you want to pay attention to if you are trading corn would be the crop production and WASDE. Obviously, meat prices are irrelevant in that case. But those are the types of things that you're looking for going into Thursday. Now, we do have a full day until that happens, a little more than a day, obviously, including today. But, you know, for the most part, it's a bear trend. The way that it looks to me, we've overextended ourselves to the downside. We have a huge bull rally to the up. If I were to do this as a play-by-play, I could see the bull bar at the bottom. Something like this, closing out relatively strong, and then probably having a bull bar that looks something along the lines of this. Could be a bear bar as well, doesn't really matter one way or another, but a relatively whippy, choppy day, and then after that, it's probably not going to do much. But remember, Thursday is the big data, right? So really what you'd want to see before that happens is the market to go sideways, maybe dip a little bit more, and then the news comes out. That's where the decision is going to be made. So in the short term, basically what I'm saying is we do have a bear trend in play. We have big crop production news coming out on Thursday. This is a very strong bull rally to the upside going into the last 3 hours or so. It's not something that I would want to try to bet against and go short into. What I would rather wait for is confirmation on the next 4-hour bar to see if it comes out weak, right? A bunch of weakness, a doji, a bear bar, anything that shows weakness, that's where sellers will start coming in. Now, if I had my way and I could get everything that I wanted in life, which with the markets is never the case, but it would be really nice to see a bull spike all the way up to the top of the wedge, because that's where a lot more resistance is going to be coming in. Buyers who bought the low are going to be taking profit at the swing high in the wedge. Buyers who are taking profit see this big bull bar, they're going to take profit anyway, regardless of where it closes. So it's something to keep in mind. You know, I would prefer to see this go a little bit further, but it doesn't necessarily have to. I would assume the next 4 to 8 well, add an hour to that, 4 to 8, so 9, would be mostly range-bound, choppy, and potentially slightly down. So that would be the way that I would approach it. What I would really like to see is the market to pop up on the WASDE news, pop up above 370 for a shorting opportunity to slam the market back down again. But for now, it's in a situation that I don't really know that I would want to buy into, and I don't really know that I would want to sell into it initially, because it could spike another $5. So you got to be a little bit careful there. But hopefully that helps narrow it down at least a little bit for you. I mean, it's a bear trend. That's what I have to kind of default back to. Now, if we zoom out a little bit further, it's still a bear trend. So I would rather see it. I would rather be a short seller, but I would rather be a short seller higher up towards 370. And we are done with the market analysis, so feel free to type in any other markets you want me to take a look at, and I will analyze those for you. If I don't see anything else coming in, then we will wrap it up for the day. Overall, I mean, you know, all things considered, today was horrendously slow, but there were still some opportunities. Even the stocks, man alive, the stocks were slow. Pepsi had some really great setups. Had some early morning runs on BLIN. That's Bridgeline Digital. Now it's more probably going to be a pump and dump and crash back down to the $1 mark. But it's today was pretty scarce. When I load up my stock scanners, and just because it's a stock scanner, it gives you an idea of what to expect throughout the day. And when I load up my stock scanners in the morning and I see like one stock on the list, two stocks on the list, like, oh no, today might be really rough. And when there's not that many stocks in line, guess what? The indexes, which are made up from stocks, probably not going to do much either. And that is exactly what we saw today. So you could use that as a little bit of an indicator. If you're doing some scans for some stock plays and you don't see any, it might be a little bit of a red flag. I'm not seeing any other requests for markets coming in. Not a big deal. Of course, as we just did with the corn one, if there is one and you're watching this after the fact, feel free, post it down in the comments. I'll take a look at it the next day for you. Be as specific as possible if you're going to do that. Let me know the time frame, the month. That was perfect. It told me exactly what you wanted to see, but just tell me what charting time frame you want me to take a look at for you, whatever your preference is. We'll analyze it from there. But aside from that, that's going to do it for this one. Make sure underneath the video, click on subscribe and the little bell notification icon so you're notified every time our videos come out. You'll be able to see those. We usually launch 1 or 2 videos a day, except on Fridays. And yeah, aside from that, like we always say, it doesn't matter what market you're trading. Always make a plan, trade the plan, follow those rules. You'll be okay. If you have any questions, feel free to send me an email, jbrink@slingshotfutures.com. Until tomorrow, have a good one. Trade safe going into tomorrow's news announcements. And of course, crude oil inventories if you're a crude trader. And we'll see you all then.